How to trade Forex, the conclusion. Firstly, a big congratulations. Well done you for getting this far with your studies, and I hope by now you're actually making money and have some confidence as a trader. You've come a long way and you've made a step change in your financial knowledge of how to make money. So what have you learned? Well, you've learned how to trade currency, you've learned how to minimize the risks involved, you've learned how to keep trading time to a minimum, and you've learned how to keep the cost of entry very low. You should by now be making money, and it's critical that you keep a level head and that you don't overtrade. Take your profits in a little and often strategy, and do not let your account grow too large too quickly. I'm now going to give you a note on the psychology and emotion of trading. Firstly, how many trades does it take to double your money? Well, that depends obviously, but let's start with equity of 1,000. Now that could be £1,000 or $1,000 or 1,000 of any currency. But for this exercise I'm going to use £1,000 because that's the currency that we use in the live trading experiment. So 1,000 would give us trades, and if you should remember this, of volume 1,000 times 0.0006. So that would be 0.6. So in this example, 60 pence, or if we were using dollars, 60 cents. With an average gain of 50 pips and sticking with that 0.0006 and compounding our gains, we would get, after 7 trades, we would be up by £231, dollars, whatever it was, or 23%. So just looking at that top line, we start with equity of 1,000, we have a volume trade of 0.6, and with 50 pips we would have a gain to £30. So going to the bottom line and compounding it there, we would go with a starting point of £1,195. Our trade would have gone up to 0.72 instead of 0.6. Our gain on the last trade would be £36, and we'd have equity at the end of 1,231. Take away the 1,000 we started with, that's our 231 or 23% gain. Continuing that, after 14 trades, that's a total of 14 trades, we'd now be up £514 in my example, or 51.4%. And if we kept going, after 21 trades, we'd be up to 1,861 of equity, that's a gain of 86%. And it would take us a few more trades, 3 more, to get to our 100% gain. So after 24 trades, we're now up by 1,033 units, or 103.3%. So that's the answer. With that level of volume in each trade and gains of 50 pips, it would take us 24 trades to get to where we want to be if we chose to try and double our money. However, with an average gain of 50 pips and sticking to that 0.0006, compounding our gains we would get if we didn't stick to the 0.006, but just always round it up slightly, we could just do it 1 trade less. So after 23 trades, we're now up 1,050 or 105%. So what I'm saying here is, instead of sticking absolutely rigidly to that 0.0006, just rounding it up to a whole number, to the nearest 10 cents or 10 pence, you'd get there more quickly, but not that much more quickly. 1 trade. However, I used a modest gain of just 50 pips per trade. The live trading experiment is progressing as follows. After 7 trades, we are up by 61.8%, so almost 62%. The reasons for that are, first of all, if you look at the starting line at the top, we started with 1,000, and instead of using 0.6, I actually used 1, and instead of getting 50 pips on every trade, I often got rather more. So I had a couple at 48 pips, then a couple at 100, and so on. So doing that, after just 7 trades, we were up almost 62%. After 9 trades, we were up nearly 69%. And at that point, in the last couple of trades, I'd moved the volume size up to 1.5. But the gains were actually down. I was being very cautious and getting out very quickly. So you need to be flexible in both directions. Not just at putting bigger trades on and taking more profits, but when you're being careful, take less and get out. If you've got any feel to get out, do it. The average percentage of equity that I used so far on those 9 trades was in fact 0.00073 times equity. So not much more than the 0.6, but it definitely had a better rate of gain. The average gain was in fact 63 pips, or just over 63 pips per trade. Now, assuming these figures continue, we'd get to a position where after 13 trades, we get over that 100%, to 106.8% in fact. And at that point, we'd be using trades of 1.5 volume and still having a range of gains between 50 and 100. So not fantastic gains, but enough to put the equity up. So just by making those simple changes, instead of taking 24 trades to double our money, we've taken 13. And those 13 could be over any period. You could in fact do them over a week if the opportunities were there, or a month, or a couple of months, or a year, or even a couple of years, if that's how you want to trade. If we scale that growth rate up though, after just 130 trades, we'd be sat with a pot of 1,024,000. Believe me, that's just not going to happen. And why not? Well, the short answer is psychology. We would end up placing huge trades and requiring huge gains before closing those trades. We would also have not taken any money out of the account. Now, the chances of that happening with me, nil. And I'm sure for most of you, it's probably also nil as well. It's better to recognize this and have a strategy for making withdrawals and for keeping things under control. I tend to choose a figure, an amount of money to leave in my account, and then to harvest reasonable amounts above that level. So for example, starting with £1,000, I may choose to just leave it in and build that figure until I get it over, say, £5,000. And thereafter to take amounts out of, say, £1,000. In other words, build it up to 5,000, in fact then to 6,000, take 1,000 out, and just keep doing that. So every time you get to 6,000, take 1,000 out. Absolutely great strategy. It worked for me tremendously well. In due course though, I would let that 5,000 figure build, by now and then leaving an extra £1,000 in, or just leaving a little bit in, not taking the full 1,000 out. And what I actually did was I built my pot up to £15,000, and then I started taking amounts out above that of £2,000, £3,000, £4,000, £5,000. I then returned to the strategy of letting things build, and eventually I grew my trading pot to £40,000. But it did go higher than that, but I just wasn't comfortable trading it. Above that level I was uncomfortable, so I now maintain it at around £40,000 and take out or harvest money over and above that level. I found that above the level of £40,000, psychological or emotional factors began to affect my trading decisions. And of course, we're all different. Your level at which you get these factors cutting in may be way above that 40,000 or way below it. I don't know. Only time and practice and actual trading will tell. So remember, there's risk involved in trading. There's time involved in trading, and there's the money involved in trading. So you need to keep your skills building. No one gives better support. You'll find that we're available at very short notice to hold Skype conversations, to answer emails, to answer telephone calls, or however else you may choose to get in touch, such as by social media. And don't forget that by joining up on this particular course, you've got access to Forex Trader Magazine, the magazine of our trading community. And in this magazine, we're constantly upgrading skills and knowledge and development. It really is the way to keep yourself sharp and to keep your knowledge absolutely up to date, and also hopefully to share your experience. So, once again, thank you for joining the How to Make Money Trading Forex course, and also hopefully for becoming an active member of the Forex Trader Magazine community of traders. Thank you once again.